Time once again to check on the latest earnings trends with Zacks Director of Equity Research, Dirk Van Dyke. Dirk, we've got some mixed signals coming out of the earnings news that's out there. On the one hand, you've got some companies, even as late as this week, signaling some stabilization in their business conditions, some even suggesting that maybe their performance has hit bottom. On the other hand, we've got a lot of companies slashing Q2 and or full year guidance this week as well, suggesting maybe a meaningful turnaround in this downfall is a little further off than people may have originally thought, or at least thought a couple of weeks ago. Where are you at in this thinking?
And I think that a lot of the hopes of these green shoots are not misplaced, but say premature. Yeah, I mean, overall, if one looks at the total macro picture of where the S&P earnings have come in, we're about down 9.5% from a year ago, and sharply higher, almost double what the 139 companies that have reported in the fourth quarter. However, and this is a huge however, all of that is due to the financials, and almost all of the improvement in financials is due to some of the poorest earnings quality that I have ever seen in a sector. I mean, it is it's really accounting games. If you exclude the financials, right, then we are off 22% from a year ago and 12% lower than we were in the fourth quarter. So let's pick that apart a little bit there, because you've made a couple of interesting points. On the one hand, financials much better than expected. On the other hand, the quality of those earnings, as you put it, awful. Take that awful quality, couple that with all of the unanswered stress test questions about the banks, and does that equal, in your mind, that maybe the earnings that we've seen come out of that sector may be a little suspect? I'd say a lot suspect. I think that they, you can't say that they're guilty without a trial, but one could probably get an indictment.
Well, but to say the least, a lot of still unanswered questions about those earnings.
Yeah, and I don't think the stress tests are necessarily going to answer those questions. A, we don't know exactly what they're going to provide in terms of the information, and B, the only part of the stress test that anybody should pay any attention to is the more adverse scenario. That should be the baseline. Their current baseline is a joke.
All right, and still, again, a lot of details forthcoming, and they're coming out in dribbles and drabs, and so we're going to have to see where that all goes. But as far as earnings season on the aggregate, you're still looking for a bottom line of what?
Bottom line, we're looking for about 25% below a year ago. I mean, the financials are a little bit earlier reporters than in general, so we've sort of gotten that quote-unquote good news more through the system than other sectors. I mean, there's still more to come in. So, I mean, but, on the other hand, we do have positive surprises, outnumbering negative surprises by about 2 to 1. That is entirely normal. It's a little bit below average, but still better to have a positive surprise than a disappointment.
And you tell us that healthcare, tech, and discretionary are showing a good number of positive surprises. Is that the good news?
Yeah, that really is. And I think particularly as far as the market is concerned, they probably like what's coming out of the tech sector the most. In that's one of the sectors that you really look to start leading you out of a bear market, bad economy era. And I mean, some of the stuff on the discretionary now a lot of those discretionary were companies with February fiscal quarter ends. There's a little bit of mismatching of the time periods with the rest of the firms that have reported. but you know, we'll see. And actually, in recent weeks, the discretionary has sort of been coming down. It was looking really good very early in the earnings season. As more have reported, it's sort of drifting back into the rest of the pack.
All right, I have to ask, with all of the talk of the swine flu epidemic, pandemic, call it whatever you want to call it, out there, what impact is this news going to have now going forward on earnings in the biotech pharma sector?
Yeah. Well, clearly it could be a big positive for some of the healthcare companies. Alternatively, it's a big negative for other areas. I mean, it's certainly not good for airlines, hotels, you know, which are already hurting a lot. I mean, if it really starts to spread, people are going to be less likely to go out to the movies, even less likely to want to go out to the stores. I mean, if everybody, I mean, you see what happened in Mexico City. I mean, you had a city that is, you know, the size of New York, Chicago, Boston, and Philadelphia combined, shut down and looking like a ghost town.
So
you know, imagine what happened that would do if that happened in the U.S. and New York. Everybody had to stay inside and all the schools, and I mean, that would be devastating to the economy.
So in other words, just something else to put another drag on corporate earnings going forward.
I mean, we don't know now how serious this is going to be. If it really does break out and it does have this sort of death rate that on the first initial data it looks like it does, yeah, that could be a very serious damper on the economy. If it turns out to be like SARS or something like that, yeah, we've had how many false alarms on potential pandemics, you know, over the past 50 years? I mean, tons and tons. I'm old enough to remember Jerry Ford getting all upset about the swine flu, which is what we have now. Yeah. So, I mean, it sort of comes around, and nothing really happened in that case.
Right, so another wild card out there. All right, if you want to catch Dirk's latest text version of his earnings trends commentary for this most current week, all you need to do is go to Zacks.com's homepage, scroll down that homepage until you get to the headline that's right next to Dirk's picture. I happen to know for a fact it is the most current commentary that's up there. It'll take you right to all of the details for this Q1 earnings season that Dirk has compiled for you. With Dirk Van Dyke, I'm Terry Ruffalo.